Excellent. Hi, everybody. Thanks so much for joining Climate and Community Institute for our webinar on policy solutions for the home insurance crisis. It's great to be with you all today. My name is Ruthie Gurevich, and I'm the Housing Policy Director at Climate and Community Institute. We're a national climate and economy policy think tank. And it really feels more urgent than ever by the day to be bringing together this incredible panel to talk about the mounting home insurance crisis today amidst continued devastating storms as recently as this week in North Carolina that are forcing people to become homeless, to become separated from their community, all while it just kind of increases the urgency to make sure that we have the bold policy solutions in place needed to address this crisis. So today we'll hear from researchers, policymakers, practitioners, and advocates on the policy paths out of this crisis. I'm really excited to be joined by Maura Burse from Climate and Community Institute, who's led new research on this topic that she'll go over shortly, and I'll share with you all in the chat. I'm also joined by Florida Representative Anna Eskamani and Angie Nixon, by Afifa Kalik with SEIU Public Employees Florida, by Shauna O'Shaughnessy at Community Housing Improvement Program in California, and by Julia Nurbin with Minnesota Interfaith Power and Light. We're going to have a really great panel discussion, and then there will be time for a few questions at the end. So feel free to put your questions in the Q&A box at any time, and I'll be sorting through that. So first, I'll hand it over to Representative Eskamani to ground us in some opening remarks.
Well, thank you so much for having us, and huge gratitude to everyone involved in this research study and in this final report. I've actually had the chance to preview this report during one of our climate energy caucus meetings in the legislature last month. And the information here is transformational, and I really do hope that it will address not only some of these crises in front of us, but inspire us to rethink how we look at disasters and how we respond with insurance in the concepts of disaster relief. And so for those who don't know who I am, again, my name is Anna V. Eskamani, proud to represent District 42, the Florida State Legislature, which is the heart of Orange County. I was first elected in 2018 and approaching my last term in the legislature. And without a doubt, one of the biggest issues of concern for me and for constituents continues to be the rising rate of property insurance alongside the climate crisis, and what are we going to do about it? And I think Ruthie helped us set this foundation of how timely this conversation is. Of course, the most recent Hurricane Helene has just devastated parts of Florida, all the way into Georgia, North Carolina, Tennessee, parts that no one expected to be impacted are impacted. Many of our homeowners in the Big Bend did not even have insurance because they can't afford it. So this path to recovery is going to be very difficult. Of course, we also just saw over the weekend, 60 Minutes have a special segment focused on Hurricane Ian, which was 2 years ago, and how we have residents in Southwest Florida who has still not been able to get paid out by their insurance companies, are not living in their homes, and are waiting for action. So this conversation is just so urgent. And especially when we think about the rising frequency and severity of storms alongside other types of disasters in other parts of the country, like wildfires, fires, floods, and other climate-related disasters that have laid before us just the significant flaws in our disaster insurance systems. And whether it's homeowners struggling to keep up with the skyrocketing premiums, or entire communities just left without affordable coverage, or folks who have paid their bills on time and they get a renewal notice and never filed a claim before, it is clear that traditional insurance model is no longer working for too many Floridians and Americans. And of course, it's important for us to remember that these disasters don't just impact property. They also impact our livelihoods. Families are left with impossible choices between rebuilding their lives or facing financial ruin. Meanwhile, insurance companies are not only making large profits, but they're having to pull out of high-risk areas or raise premiums beyond what middle-class and working families can afford. And so we have to acknowledge the financial burden of these disasters is not equally shared. Depending on where you live, how much money you have determines your ability to even bounce back from a disaster. Low-income families, renters, small business owners often bear the brunt of the recovery cost, While again, large corporations find ways to protect their interests, as we saw in the 60 Minutes special segment, where insurance companies were basically editing the disaster reports from public adjusters. So if we're to build more resilient communities and protect the financial security of Floridians, it's time to rethink how disaster insurance works. We need innovative solutions that spread risk more fairly, invest in pre-disaster mitigation, and ensure that property insurance is accessible and affordable to all. I would also argue, and you'll see this in the report, that we need a true public nonprofit insurance company that's open to all Floridians. This is by far the single most transformative change that we could make. And I really do believe that it is inevitable in Florida that we will pursue such a policy. Our state is one big peninsula sticking into Hurricane Alley, and there are clear indications that temperatures are just going to get higher, which means that it'll be easier for hurricanes to become more extreme. Alongside that reality, with sea levels rising, we need new approaches to this crisis. And the good news for Florida is that having a public nonprofit option for all Floridians is bipartisan. We had a bill last session filed that was supported by both parties, though not leadership. And of course, it's mimicking what Texas and California already do. The reality of climate change is that it's not a problem we can put off till tomorrow. It's a challenge that we should have faced decades ago, but now is better than never. So let's use this opportunity to explore meaningful reforms and work towards an insurance system that meets the needs of today's world, one that not just considers property, but also protects people, and not one that prioritizes only profits. And of course, an insurance system that provides peace of mind to everyone in the face of a disaster. So with that, I'll pass it back to Ruthie to get us through the presentation and for the panel discussion. But again, I really appreciate everyone being here, being open to this dialogue, embracing new ideas. The old way is not working. So really grateful for this this research, and hopefully good things to come out of it. Thank you again.
Thank you so much, Representative. And yeah, really appreciate you kind of thinking about this from the constituent perspective and then coming to kind of the need for bolder solutions as a result. I'm now going to turn it over to Moira to kind of walk through what are some of those possible policy avenues that you found in your own research.
Thanks so much, Ruthie, and thanks to Rep. Escamani for introducing us. I'm really pleased to be with all of you today to present this research. So I'll wait for Ruthie to get the slides up.
They should be up. Do you see them?
Okay, great. Thanks so much. So last week, Climate and Community Institute published this new report, which was a culmination of 10 months of research with the stellar research team listed here, as well as collaboration with and feedback from other researchers, policy analysts, housing providers, and community organizations around the country, including several of my co-panelists. So at CCI, we embarked on this project because we wanted to build more understanding of what's happening for households beyond the headlines. We wanted to interrogate current assumptions about how home insurance works, and we wanted to offer policy ideas that could ensure protections for homeowners and renters, meet the moment of a rapidly changing climate, and contribute to climate solutions rather than to the climate crisis. Next slide. So the report is chock full of new data analysis on how insurance price increases, climate risk, and socioeconomic factors overlap across the country. For the sake of time, I won't be sharing most of that. So I definitely want to encourage you all to check out the report for some of the mind-opening graphs and maps like the two featured here on the screen. And that's just a quick little preview. Next slide. So for the sake of time, I do just want to highlight 4 national level conclusions from our analysis. So first, this is a collective problem, right? Many parts of the country face risk of significant losses, often from multiple hazards. And of course, the events of this week with Hurricane Helene make that starkly clear. We're also in this together, but not equally, right? Today's insurance crisis has unequal impacts on different groups along the lines of race and class, citizenship status, and more. Third, the insurance crisis did not appear out of nowhere. It is connected to broader housing market dynamics, including discriminatory housing practices that the insurance industry itself has participated in. And insurance price increases are stymieing efforts to build more and greener affordable housing, and I know Sean is going to talk more about that. Next slide. So the report also takes a deep dive into how the insurance crisis is playing out in 3 states, Florida, California, and Minnesota. Again, I won't spend a bunch of time on details here, but I do want to share 3 cross-state conclusions that we reached that we think can apply pretty broadly across the country. The first, current policy approaches of deregulation and financial incentives for insurance companies are not solving the problem. Second, existing risk reduction measures are not being deployed at the scale or pace needed to really reduce growing risks, and definitely not doing so in a way that's solving for equity. And third, premium discounts for retrofits are not changing risk profiles or meaningfully reducing insurance premium burdens for households. Next slide. So our final piece of analysis in the report examines prevailing narratives and assumptions about home insurance. I am going to spend a bit more time on this part of our work because it's really important for what we then conclude in the policy proposals, which are the subject here. So first, instead of prioritizing protection of people's homes, private insurers are engaging in speculative maneuvers to secure profit, and that's often enabled by regulators. And Florida is really a great example here. So in that state, as large insurers have left in past years, the state's leadership has allowed the creation of what are often called specialists. So these are small insurers offering policies for a specific type of risk. Research by Zach Taylor, one of my co-authors on this report, has shown that these specialists are generally set up for the purpose of attracting and profiting from investment capital. So this means they don't need to stay open beyond a handful of years in order to achieve their aims, regardless of what happens for policyholding households. And yet, the state of Florida supports these short-termist profit vehicles in multiple ways, including through a dedicated guarantee fund, as well as a $2 billion hurricane reinsurance program that the DeSantis administration supported in 2022. Next slide. Second, current policy choices are shifting risks around rather than reducing them for households. And this is despite the fact that physical risk reduction measures, according to outside research, not CCI research, but may save as much as $13 for every $1 invested, right? And yet the risk reduction measures we're seeing are wholly inadequate. And meanwhile, continued fossil fuel production is setting us up for more and worse climate disasters. Next slide. To the extent that the industry does engage in risk reduction, it's channeled through what's called risk-based pricing, right? So this is the idea that setting premium prices based on risk level is an effective way to get people to reduce risks. But this idea does not stand up to scrutiny, and it causes unacceptable inequities. So, right, it's logical if you think about it, right? People make decisions about where to live for all kinds of reasons. Maybe where schools are, where family is, where jobs are. Or maybe they've lived in the same place since way before climate-driven disasters were the problem they are today. Also, plenty of people can't afford to pay upfront for big and costly retrofits. And many of the necessary risk reduction measures to respond to these big disasters, like sewer upgrades or neighborhood wildfire prevention, aren't measures that individuals can take on their own, even if they could afford it. Next slide. And fourth conclusion here, though there are many valid reasons to critique existing public insurance programs, like the National Flood Insurance Program or state insurers of last resort, these programs aren't working well because of poor design, not because the notion of public insurance is unsound. So for example, the NFIP and a lot of the state insurer of last resort programs only insure one type of peril, and typically only for those who can't get coverage elsewhere. So, right, that's like a health insurance program that only covers the sickest cancer patients. Of course, it's not going to work well. Next slide. So we conclude from our research that the home insurance system in the US is fatally flawed, right? The vast majority of disaster risk reduction and response for households right now is being left up to insurance markets. But as the evidence in this report makes clear, and frankly, the experiences that we're seeing this week, and I'm sure many of us have experienced in other moments, the profit-seeking and risk transfer approach of private insurers is not proving adequate to the task. right? Instead, the cost of the damage from losses that private insurers cannot or will not insure is either being borne by households, which can lead to individual financial ruin and can contribute to financial system risk, or is socialized onto public disaster response programs that are reactive and therefore not rationally budgeted. Instead, my co-authors at CCI and I assert that we must reimagine our disaster risk finance system as one that reduces risk and provides protection equitably and fairly, because our fates are shared, especially as climate change makes these collectively borne disasters more frequent and severe. And so, next slide, that's why we're proposing a new policy vision for home insurance in the US, what we're calling housing resilience agencies. Next slide. So what we're proposing is that states set up these HRAs, for short, that to have two primary functions. One, to provide public disaster insurance that fairly spreads the risk of non-preventable disasters and provides equitable post-disaster recovery support to increase resilience, right? And that coverage would be available for homeowners, for renters, for mobile home dwellers, for affordable housing providers, all kinds of households, right? And second, these HRAs would coordinate and oversee comprehensive disaster risk reduction to prevent and or lessen damage before disaster strike, right? The more we build resilience, the less we need to rely on the safety net of insurance. And activities of the HRA in this regard would include everything from deciding where it's too risky to build new housing, to helping people relocate from where it's too dangerous to stay, to carrying out community-oriented mitigation efforts. Under this model that we're proposing, private insurers would still provide the standard policies that cover things like kitchen fires and burglary and the like, with HRAs providing the disaster coverage. All right, this is similar to home disaster insurance in some other countries like New Zealand, and helps ensure that private insurers won't just skim the least risky policies off the top and leave the public program with the riskiest ones, thus replicating many of the same problems we currently face with insurers of last resort. Next slide. Our proposal outlines several aspects of HRAs that would support their viability, function, and equity, including things like public catastrophe risk modeling, climate risk advisory council to inform the agency's work, oversight by a democratic governing board with members from policy, civil society, and scientific communities. We propose financing would come from diverse sources, including, of course, premiums, but also taxes or fees on those entities most responsible for the current crisis, like fossil fuel companies, and those that would most benefit from stability in home insurance, like mortgage lenders and the real estate industry. And we think these financing mechanisms are key, along with making this a single payer system instead of just a public option, to avoid privatizing the profits and socializing the losses from future disasters like the current system does. We also think that state HRAs could collaborate with one another to pool risks and resources across states, and that the federal government could and should support state HRAs with reinsurance and risk reduction funding. Next slide. So there are lots of details about all of this in the report. But in conclusion, I'll end by saying, in order to confront the growing housing safety and affordability crisis under climate change, at CCI, we believe that public programs that provide fair and equitable disaster insurance protection, coupled with coordinated, comprehensive disaster risk reduction, are the way forward. And with that, I'll end. Thank you, and I look forward to the discussion with this incredible panel today.
Thank you so much, Moira, for leading that massive research project and then figuring out how to explain it in 10 minutes. I'm really excited to now kind of bring these ideas to life even more with our panelists. First, I want to start with you, Shauna, as kind of an on-the-ground perspective as an affordable housing provider and developer. I think one of the findings that this research really illuminates is that while the home insurance crisis is often focused on homeowners, there's also a lot of impacts on the rental market and on renters and the affordable housing development community in general. So I'm curious, from your perspective, what are the difficulties of providing affordable housing, given what's been happening with insurance markets in California? And how is the current policy landscape making it more difficult for you to advance your work in the face of this problem?
Thanks, Ruthie. So just a little context, Community Housing Improvement Program, CHIP, we're located in Northern California, so north of Sacramento, in an area that is hit pretty frequently with wildfires. We're in the foothills, but rural ag area. And what we have seen is that rapidly escalating insurance costs have become one of the biggest threats to both operational stability among affordable housing providers across California and even the country, but also development. We've seen year-over-year premium increases that have become impossible for many properties to absorb. I have colleagues who've been hit with 200 and even 300% increases in a single year. And many properties across the state face non-renewals, such as our Paradise Community Village properties, as you can see behind me. But what does this actually mean? What it means is that property owners are forced to maximize rents. For-profit owners can raise rents as high as they need to maintain profits. But this ultimately prices out many working and low-income renters, increasing housing instability in our state, in a state that already has an affordability crisis. And then nonprofit affordable housing developers are constrained by both our mission as well as regulatory requirements. So while rent increases can happen, they are capped. And we recognize, however, that for our clients, even small annual increases are hard to absorb. But also for us operators, when rents can't cover operating costs, we have to subsidize properties with other dollars. And believe me, the hardest money to fundraise for is to cover property insurance. Definitely not what people see as the highest priority for their donated dollars. And recently there have been a couple of high-profile cases of owner-operators going bankrupt here in California, while admittedly insurance wasn't the primary cause. Kind of that mix of that mismatch of operating costs and sustainability was there, and insurance now is playing a huge role in that. So we're seeing kind of everyone caught in this very vicious cycle. You have the folks that are the most vulnerable who are at risk of homelessness, and then you have operators like us who are trying to support and help and that are kind of caught between these very big players. And then, as I mentioned, the insurance crisis is making it harder to develop new projects to address affordable housing shortages. I mean, we're in a multi-million number deficit of housing units in California. And now, because of insurance, we can't get course of construction. And then when we're doing our feasibility studies and our pro formas, we have to look at availability of insurance, which seems like it changes every year. And then how do we build that into our operating budget, and is a project feasible? Before, that was really something that was never even a consideration. So how, you also asked, Ruthie, how the current policy landscape is making it more difficult to advance our work. So as you said at the beginning, a lot of policy solutions have been focused on the single family market, but the crisis in our industry is just as big, and we provide the largest share of housing for folks. In California, the FAIR Plan, which is our public plan, has made some adjustments to allow for projects like Paradise Community Village to be covered. Some of those changes were they increased the coverage, and then private insurers were able to step in and do that difference in coverage. So as Moira said, it isn't helpful for a affordable housing project to have just catastrophe insurance. We need kind of that ongoing regular insurance. But it is absolutely unsustainable for so many properties to be part of this insurance of last resort. It is absolutely unsustainable and is going to potentially, the likelihood of an even bigger crisis with so many of us in this pool is almost inevitable if it's not fixed soon. And I think the other thing is like just all the talking. Like, we know this is a crisis, but things have to be done. And it feels like everyone's talking about it, but there are finger pointing, the legislator saying the commissioner has to fix it. The commissioner says the state legislator has to fix it, or the legislator says the feds have to fix it, and the feds say it's a state issue. And I know that folks are looking for solutions, but it has to happen. And that is what I really appreciate most about this research and report, is that it feels like the solutions are tangible, and while some are bigger and will take a while to set up, many can be implemented immediately. So very grateful to be part of this conversation and just share a little bit about what's happening on the ground. Thank you.
Thank you so much for laying it out for us, Shauna. I think that's really helpful context and kind of brings us to our next question, which is for Afifa and Julia. You know, as the policy advocates on this call, what are your organizations doing to address the crisis of home insurance in Florida and Minnesota? And how does this research on kind of actual policy solutions, instead of only the talk that Shauna was alluding to, outline the needs of your own members?
Sure. Thanks, Ruthie. And I can go. My name is Afifa. We have to first of all acknowledge what this crisis really is about, right? And that is the extreme corporate greed that we have seen in our communities, right? And that's like absolutely critical, because yes, there are quote unquote natural disasters, and then the impact of those natural disasters, and then there are man-made disasters, right? And property insurance crisis is a combination of both. And at the heart of it, at the central point of it, is the corporate greed. We have seen time and time again where the state has failed to address the real consumer crisis, or looked at the policy solutions that are based on consumer concerns. Rather, those policies that are designed to address these crises, these disasters, is written by actually the corporate profit seekers who are actually contributing and creating those disasters. We also have to understand that these corporate companies with a lot of resources has created a narrative which suits them, right? For instance, what this report has addressed, like one of those crises, a narrative that they have pushed for is like, oh, we need protection for property insurance agencies because there's too many legal actions taken, you know, too many claims and all of those kind of things, right? And those costs are creating, hitting the bottom line, and that's why those property insurance agencies are leaving the state, while not addressing the real concern, which is like, you know, there's no accountability on these property insurance companies. Like, you know, we know that they are consumers, single mothers, right? Who were dropped a day before a hurricane strike Florida, right? You know, how is ethical, moral, or makes sense? Like, absolutely ridiculous that this is happening to people who are like mostly impacted by these crises. We have also looked at home hardening kind of like, you know, policies that the state was offering, which is like, you know, hey, I am the impacted community, and if I do not know about these resources that are available to me, then they are not good, right? And that is why most of these funds are untouched or taken by the same people who take advantage of these funds over and over again, right? Instead of impacting the real communities. And all of these things, like, you know, with the increasing climate crisis that Florida is facing, right? We literally have schools that were closed for a day because the school districts were making decisions that there are 2 more hurricanes coming, and how much can they do? And that's like, you know, that is like just unimaginable that how local municipal agencies and entities have to survive, considering there is no state solutions available, right? In the midst of that, citizens, which is our public option, is the only safety net. And we are afraid of like any major hurricane that will hit Florida will put citizens in bankruptcy, right? They are not fully funded to ensure that all 1.5 million consumers that have recently sought citizens insurance are able to be covered by any crises. So what we are trying to do is ensuring that there is an awareness on this issue, which this report absolutely helps us fight those narratives that the private greedy corporate agencies are promoting, which is like, you know, hey, we are in crisis, help us, right? It also gives us like real concrete policy solutions like those climate resiliency or housing resiliency agencies, and also looking at those public or single payer options that can provide safety net to the consumers. And also then looking at like, you know, our outdated building codes, which are not standardized. There's no minimum standard and they are not enforced also. So looking at all of those crises along with the climate impact, this is like absolutely a player to work with CCI on this report, and that's giving us like real policy solutions that we can look forward to. Thank you.
Thank you so much. Over to you, Julia.
Hi, everybody. So my name is Julia Nurbin, and I'm the executive director of an organization called Minnesota Interfaith Power and Light. And we work with communities of faith and others across the state of Minnesota to ensure that we have equity baked into every level of the climate action that we work on in the state of Minnesota. So Minnesota is an interesting case, as outlined in the report. It's not the first state that you think of when you think climate disaster. But we have all sorts of what is being called these secondary events that happen in Minnesota. So just last night I was listening on the news. September was the driest month on record. And our spring was the wettest spring on record. And what you might see in the state of Minnesota in an extremely wet year is that you have big storms, and you have saturated ground, and you have trees that tip over when the rains come. And I thought I would just talk for 1 second about an event that happened on August 11th, 2023. There was a storm. It was in my neighborhood, and the hail was the size of baseballs. And you know, this was not a storm that was particularly talked about beforehand. It was not something that kept people away from the grocery store. But at the end of the day, over half of the houses on my block have had their roof replaced. And those who haven't had their roof replaced have had their insurance cost go. I mean, everybody's insurance costs have more than doubled in the neighborhood. And if you're seeking insurance in this neighborhood, you might see, you know, triple the rate, or you may actually be turned down. So this becomes a crisis because Minnesota is actually the worst, actually the Twin Cities metro area is the worst racial disparities in the nation in terms of housing between white homeowners and African American homeowners. And so we have, you know, 77% white home ownership in the Twin Cities and only 21% Black home ownership. This is built on this legacy of racial covenants. And I just thought I would break my display here. I guess I should turn off my blurring screen here for 1 second. But this is I'm just going to show you this document. This is a document that was a racial covenant that basically made it illegal to sell the home to a person of Negro descent. And it's been a huge conversation in the Twin Cities area, but it's something that is incredibly present in our awareness, and people are really worried about what will happen when people are denied insurance in terms of people's ability to get a mortgage and people's ability to achieve home ownership. So Minnesota Interfaith Power and Light has been working on promoting equity within the climate movement for the past decade. And one of the things we worked on a few years ago was establishing a green bank in Minnesota. And I see that Rep. Greenman is on the call today. Thanks for being here, Representative Greenman. She was the primary author of this bill. And the idea is that we want to make low interest loans available to people who are undercapitalized, and be able to promote climate justice through making resources available. And the question is, how does this relate to the insurance crisis? And so I'll talk a little bit more later on in the session today about what we're really hoping to see from policy in the coming years. But I want to say that as we think about this history of redlining and the incredible journey that we've gotten to in terms of really dealing with racial justice and equity in the housing market, how can we utilize this opportunity to think about the home insurance industry and the crisis in that industry as an opportunity to make insurance available for everybody, as we work towards making homeownership available for everybody. And again, maybe not homeownership, but certainly housing. So I will leave it at that and can talk a little bit more about specific policies in the next question.
Amazing. Thank you so much, Julia. I really appreciate that. And thank you also for bringing the receipts of the history of discrimination in our housing market. Now let's hear from you, Representative Nixon. As a state policymaker, I'm really curious just like to hear your thoughts on the policy proposal that Moira outlined as part of this research. And also, like, as we've heard now, really so much power lies at the state level in state houses. So as someone who's in there day in, day out, like, what are the policy conversations you're leading on this issue in Florida? And what do you think the impact of a housing resilience agency could mean for your constituents?
Yeah, for sure. So, hi everyone. I am Florida State Representative Angie Nixon, based out of Jacksonville, Florida. And the report was amazing. It is something that is definitely needed here in the state of Florida. As Representative Escamani, my colleague, my amazing colleague stated earlier, you know, we are in the middle of hurricane season and we just got hit with one last week. And so our communities, our constituencies, we see firsthand how Florida's property insurance crisis is really impacting families across the state. People are struggling to keep their homes insured with private companies, often pulling out, or they're hiking up premiums that many people just can't afford. And so the report recommendations like speak to that, and it just offers great solutions. And so the reason that these companies are hiking up the cost or pulling out, it's not just a result of bad luck or natural disasters. It's an actual failure of our system. And myself and Representative Escamani, we're determined to really fight for real solutions, right? And so some of the things that we as legislators and advocates can continue to push on the state level, right? Holding insurance companies accountable. First and foremost, I'm committed to holding them accountable and private insurance companies accountable. We need really stronger regulations in place to prevent these companies from abandoning our state, from abandoning Floridians, which is what they have clearly been doing over the past few years. And if they want to do business here, they need to stay and provide fair coverage to our residents and not just cherry pick which low risk areas to go into. And so that's why I'm advocating for putting caps on how much they can raise premiums and pushing for transparency so people know exactly how their rates are being calculated. People just don't know, right? Also, we need to strengthen our public option that we have, which is Citizens Property Insurance, the insurance company of last resorts, right? So I want to work towards strengthening that this company is our state-run insurance, and they become the lifeline of Floridians. My house is on Citizens. Many of my friends' homes are on Citizens, and frankly, it's just because we cannot afford the premiums of other companies. And Citizens was never meant to carry this many people, but as private insurance have left the market, more and more of us are relying on it. And so we need to make sure that they have the resources that they need to provide coverage and that it can be completely fair. It can compete fairly with private companies and also help keep costs down, right? Another thing that we're pushing for is investing in climate resilience. We're the state of Florida, you know, they want to remove climate change out of policies. But let's be real, climate change is at the heart of this crisis. And so we're seeing stronger hurricanes, rising sea levels, and flooding, and it's making our lives miserable. And it is also making it harder for insurance companies to manage risk. And so instead of throwing our hands up like many of my colleagues have done, we just need to act. And that means investing in climate resilience by strengthening building codes and retrofitting homes to better withstand these disasters, accepting money from the feds when that is a thing to help do these things could also benefit us, of course. And so I'm pushing for state-funded initiatives that help homeowners protect their properties, whether it's storm-proof windows, roofs, or elevating homes in flood-prone areas. Another thing is we got to protect affordable housing. This crisis is hitting at a time when housing is already unaffordable for so many Floridians. And we can't let skyrocketing premiums force people out of their homes. And so we're fighting for relief for homeowners who are being hit the hardest, whether it's through subsidies or tax breaks or insurance premium caps. And I'm committed to make sure no one loses their homes because of unaffordable insurance rates. Another thing, we got to engage and empower Floridians, right? It's not enough for me and Rep. Escamani and a few of us in the State House to advocate on these issues. We need the help of Floridians. We need all Floridians to be involved. And that's why we're organizing town halls and we're working with grassroots organizations and making sure that these homeowners across the state know their rights and how they make their voices heard. We need a movement to demand that insurance companies play fair and that they also that we're here to help them in that fight. We help them to help the Floridians. And then lastly, building coalitions and pushing for federal support, which I stated a little bit earlier. I'm not doing this alone. I'm working with my colleagues in the legislature, local officials, and advocates from Florida to build a coalition focused on addressing this crisis. And so we're pushing for federal support. Florida is on the front lines of climate change, and we really need to prepare and rebuild and make sure folks have the resources that they need. We need disaster relief funds. I'm dealing with that right now here in Duval County to really ensure that our communities are resilient. But at the end of the day, this crisis is not going to fix itself, but I'm determined to fight for the people of Florida. And I won't stand while corporate greed, as Afifa stated earlier, and climate inaction threaten the safety and security of our homes. So we need bold action, and we're ready to push for reforms that'll protect Floridians and create a more just and resilient future.
Thank you so much, Rep. Nixon. And yeah, I really appreciate how many policy pieces you touched on there. You got to regulation, transparency, adaptation, strengthening public options, know your rights training. So I think that gives people a really good sense of what the various levers are that are possible. Before we take a couple of questions from the audience, I just want to do a quick go around to close out this panel portion where we get really tangible. So for all of you, what is let's say just one step that you'd like to see policymakers and advocates take on this issue in the coming year? Or even instead, what are you focused on advancing in your work in the coming year? What's happening in the year 2025 in your orbit? Let's start with Ayushana.
Thank you. So going in a slightly different direction, immediate relief for affordable housing providers would be kind of a relief on the regulatory requirements, which is within the power of state legislatures, also our lenders, in terms of deductible limits, coverage requirements. Some of those things are in the rating of the insurance agencies, which some of the requirements are just absolutely impossible. And kind of that stress of trying to achieve an impossible bar right now is very hard. And then kind of the costs of obtaining those coverages and kind of needing to go to alternative markets is one thing. And then my advocacy really is focused on shining a light on the real world impacts. Real people are impacted. I mean, we see it every day. I think from the individual homeowners to the renters that we serve. Like it's not just money. Like it's people. So thank you.
Totally. Yeah, that makes a lot of sense. Moira, would you like to answer?
Sure. So at Climate Community Institute, we are really committed to doing research and policy analysis that supports progressive policymakers and community organizations and advocates. And so I'm really hoping that in the coming year, we're going to be able to work with the folks here on this panel and folks here on the webinar and many others around the country to build out these ideas into concrete proposals in specific states or even at the federal level, and see them move and do maybe additional research to support that work. Maybe some deep dives in other states that we weren't able to include in our report. So yeah, I'll make a little pitch here for folks on this call or watching the recording later to please reach out to us if you want to collaborate on new research, or if you want to talk through policy ideas, if you want to ask us why we proposed sort of more single payer version versus a public option, any of those things, please be in touch. So my hope is that in 2025, I'll be working with many of you. Thanks.
Amazing. You heard it here first. Awesome. Julia, tell us, what are you up to in Minnesota the year 2025?
Yeah, well, first of all, we have a lot of conversations that we need to have. I think that this report really opens my eyes and others to this idea that at the end of the day, if we have, had insurance loss 6 out of the 7 last years, that this is going to be a big and expensive problem, and that understanding how the public is going to pay for this and not privatizing the gain is going to be a big conversation. So I would like to talk about, what it looks like to really have a housing resilience agency in Minnesota. But I think in the very short term, we have an opportunity right now. The Department of Commerce is the regulating agency of insurance, and it's the housing MNCFA. So, how can we strengthen this Minnesota grants program and really make sure that people who maybe don't have available capital can harden their homes and protect their assets? So I'd like to really work on that. And, at the center of the conversation is how can we make sure that housing is equitably distributed?
Amazing. Thanks so much. Really excited to see that work go forward. And then over to Florida, take us home. Representative Nixon and Afifa, what are you all up to in 2025 on this?
I can go first. Look, climate change is a full-time event. It cannot be solved through part-time actions, right? So that's why like those agencies like, housing resiliency, climate resiliency agencies are absolutely critical. So for 2025, what we will committing to continue doing is like extreme corporate accountability. Look, you can't get away with the corporate bad practices that you're doing and thinking that it's okay, and then Floridians won't fight back or resist, right? We need single payer / public payer options. Moira, I will reach out to you to understand more the different side of it. And also look, we need green infrastructure investment. These BS building codes that are outdated, that are not modernized to new climate impact need to go, and we need to implement those building codes that work for people and communities, and they're green in nature. We cannot be providing solutions while adding to the carbon impact of our climate, right? So our policy solutions have to take into account what the climate is asking us to do, which is get serious about it.
Yeah, so I have put forth because it's like, what can we do now? And I just hate to say it, I'm just thinking about the low income families and my grandma who is 88, who is now going without insurance because she can't afford it, and citizens can't even afford that. So it's actually creating some type of trust fund where low income families and seniors and things like that can potentially just tap into it right now. I know here in the state of Florida, we're sitting on tens of billions in reserves, and it's just low hanging fruit for right now. And while we work to advocate, like many of the folks on the panel stated, to to make changes, because unfortunately these changes aren't going to happen overnight. It's a lot of politics involved, and so we have to really work to change the narrative. And so something that could actually be done like right now could be an establishment of a trust fund for people to tap into.
Thanks so much, everyone. And yeah, just on that politics piece, I mean, obviously we have people from Florida here. Last week we had a panel with Andrew Mika, who works at Housing NOLA in Louisiana. And one of the things that's coming up also is kind of like the unexpected political alliances, and also in some cases kind of cross the aisle understanding of this issue, and then in other places not seeing that. And so I think we can do a whole other panel on like coalitions and politics around this issue that I look forward to at a later date. There's a lot of questions coming in. We're not going to be able to get to all of them. And so feel free to shoot me an email, put my email in the chat after, but wanted to start here with a question from Abigail, who says, I know we're still learning a lot more about the aftermath of Helene in the coming weeks and months, but what are the main kind of insurance related problems you're seeing in the wake of the hurricane? And maybe if there are some examples that you can use to show like how the system's not working. So Moira, I'll turn it to you first, and then curious also from our Floridians.
Yeah, thanks. That's a great question, Abigail. And if I remember correctly, I read that only 4%, and please don't quote me on the 4 because it could be a slightly different number, but a very minimal number of people in North Carolina have flood insurance, which means that a lot of the damage that has come from Helene isn't insured, right? Because flood is separated out from most home insurance policies, and so if you don't buy that on top of your other policies, you're screwed in a situation like this. And so many of those people are probably really screwed in this particular, pardon my language, but it's so visceral. And I think it points to your question, Abigail, it really points to the problem with our current system of the disaggregation of perils in insurance, right? You've got flood over here, you've got, in California, we have wildfire over here, that's all separated. And that is contrary to good insurance design, right? Good insurance design is pooling a wide variety of risks, right? And spreading that out across a big population. And separating those out, as is currently happening, does the opposite. And it also means that people often don't know they don't have flood insurance. We have a stat in the report, which I'm not remembering off the top of my head, but that many people don't even understand that their regular policies don't cover flood. And so that's part of why we propose that home insurance policies and need to bundle all the risks that are facing households. Is it there?
Great. Anyone else want to kind of add to that?
I think with increased flooding, because the hurricane is pretty recent and it's on our mind, but like the extreme heat that we are facing, and the lack of protections for like human lives, and also how our housing need to be to address that crisis too, like this extreme heat that we are facing in Florida, and that's why we have like 24/7 fans on. We absolutely need to address those crises too.
Just want to say one more thing about the slow crisis. Like, there's people who are immediately impacted by what's happening in North Carolina right now. And then there are going to be, tens of millions of people who are going to not be able to buy a house and not be able to purchase insurance in the future because of the data that's going to come in after this billions of dollars of insurance is paid out. And so we need to think about the absolute crash, and also what is happening in 5 years down the line in terms of people's access.
And one real quick last minute thing, because I will not be a labor advocate if I don't talk about web workers who are at the front line of these climate crises. My members have been working nonstop, putting in 180 hours to just mitigate those impacts of the climate, and there's no protection for the workers. So we absolutely need to ensure that they are protected too.
Absolutely. Thank you so much. And Representative Nixon, I saw you maybe wanting to get in here, and then also just one other question while you're on it. You spoke to kind of also looking to the federal government for support. We have a question here about if there are like specific federal level initiatives that you're looking for or requests that you are thinking about. And then we can hear from Moira on that as well.
Yeah, so related to the first question in regards to like what are some of the issues I'm seeing post Helene, like people have been lifing, and so when they got their renewals, many of them did not realize that their $500 deductible was now 2% or 3% of whatever the cost of their insurance was. And so when you now they're not able to like get things fixed because instead of $500 cost, they now got to pay like $4,000 for some damage in terms of a deductible. And so like we're seeing that, right? Also in regards to just like what the feds could bring, right? Like just helping with like the weatherization and the hurricane proofing and hardening of our homes, right, is a thing. Also like hardening of our utility systems, right? Like that's a thing. We have a public utility system here in Duval County. And in my district, without fail, because, you know, I'm in a predominantly Black and brown district, low income, one of the lowest incomes in the community. And our infrastructure for our utility system is real bad. Like it's above ground for the most part. There's a bunch of trees. And so without fail, every time there is a storm, we are the last ones to really come up again because you know, they gotta do some massive work with around the trees and things like that. So if we can get you know, even more money for hardening within our neighborhoods, that would be amazing as well.
Thank you so much. That makes a lot of sense. Moira, any last thoughts on this federal piece?
Yeah, just to build off what Representative Nixon said, I really think we need more concerted and coordinated investment from the federal government in risk reduction and mitigation measures. And particularly, right, that said, I referenced earlier, $13 saved for every $1 spent in home hardening measures. It speaks volumes, right? And as I mentioned as well in the presentation, the federal government can do a lot to both incentivize and support states to set up these really robust and comprehensive public disaster insurance programs that we're proposing.
Yeah, thank you, Moira. Clearly, shared fates include shared levels of government here when it comes to our policy solutions. Just want to thank you all again for bringing your expertise, your personal experiences, and your kind of optimism about what might be possible in the coming year and beyond to this panel. For everyone who joined us today, thank you so much. Also just want to acknowledge, you know, we've seen comments in the chat about people who are struggling firsthand with this crisis in the wake of hurricanes, in the wake of wildfires today and tomorrow. So really, our hearts go out to everybody as we work together to think about what are the actual proactive solutions here. Looking forward to being in touch. We'll have a webinar recording up soon, and thank you all. Thank you to our panelists.
Thanks, everyone.